Happy Halloween, everyone. It's time for another deep dive into the crypto markets.
Definitely feels like the market is playing some spooky tricks on us this week.
Yeah, it's definitely a wild ride out there. But let's take a look at the treats, too. Today, we'll be breaking down the latest from the Crypto Deep Dive Market Report. So, you ready to see what's lurking in the shadows?
Always. There are always some interesting opportunities to find in a volatile market.
Exactly. Let's start with that big picture. The report shows the global crypto market cap is down, but, and here's the interesting part, trading volume is actually way up. What do you think that means for sentiment?
Well, it's a bit of a mixed bag, isn't it? Some investors are definitely getting spooked by that dip, but there's also a lot of folks seeing it as a chance to buy the dip. It's that age-old battle between fear and greed.
Totally. And speaking of folks making some moves, who are the big winners in the top 100 this week?
Well, we've got Mogcoin, Maker, and Pith Network all posting some pretty impressive gains. Celestia, on the other hand, is taking a bit of a beating.
Ouch. So typical crypto roller coaster then.
Pretty much. Ups and downs are all part of the game.
True enough. Now let's zoom in on the top 10. The report shows Treon was the only coin to actually see an increase. Bitcoin and Ethereum are down slightly. But Binance Coin and Solana, well, they're down a bit more.
Yeah, those are some pretty significant drops.
Do you have any thoughts on what might be driving that?
It's hard to say for sure, but, overall market sentiment can really impact even the most established coins.
Makes sense. Now let's shift gears and talk about some big Bitcoin news. Spot Bitcoin ETFs saw their second highest inflow ever yesterday. So that's got to be good news for Bitcoin, right?
Absolutely. Institutional investors are starting to get really bullish on Bitcoin.
I mean, those are the big players, right?
Exactly. Hedge funds, asset managers, you name it. When they start pouring money in, it usually means they see long-term growth potential.
And this is all happening right as Bitcoin turned 16. Remember that legendary white paper from Satoshi Nakamoto 16 years ago?
Crazy to think it's been that long already.
And now look at it. Bitcoin is the 10th largest asset globally. What a glow up.
From a fringe experiment to a major player in finance, it really shows the power of decentralized technology.
Okay, so back to that institutional interest. The report shows BlackRock, the world's largest asset manager. Their spot Bitcoin ETF had its biggest inflow day since launching back in January. Someone's definitely buying the dip.
Well, BlackRock isn't exactly known for risky bets. Their continued investment in Bitcoin suggests they see it as a serious asset class with a bright future.
Interesting. It really does feel like the institutional money is starting to come around on Bitcoin. Do you think that changes anything for retail investors like yourself?
I think so, yeah. More institutional investment can lead to more stability and liquidity in the market. That could be good news for retail investors who might have been hesitant to get involved before.
I see. So more stability and liquidity. That's something we all like to hear. Okay, moving on from Bitcoin for a moment. The report also mentioned Sygnum, the digital asset banking group. They're making their crypto yield fund more accessible to international investors.
Oh, yeah, I saw that.
They're using something called a RAF structure. Can you explain what that is? It sounds kind of complicated.
It's actually not as complex as it might sound. RAIF stands for Reserved Alternative Investment Fund. It's a type of investment fund structure that's really popular in Europe.
Okay, so what's the advantage of using that structure?
Well, the main benefit is that a RAF doesn't need to be directly authorized by a regulator.
Ah, I see.
That makes it much faster and cheaper to set up. So Sygnum can offer their fund to a wider range of investors.
So easier access to investment opportunities, that's always a good thing, right?
Exactly.
What kind of yields can investors expect from this fund?
It really depends on the specific assets in the fund. But in general, crypto yield funds try to generate returns through things like staking and lending, those DeFi strategies.
Right, DeFi. Speaking of which, there's another piece of news from the report that caught my eye. BNB Chain is partnering with Flipster and KuCoin to offer gas-free stablecoin withdrawals, and they're also doing zero trading fees for all of November.
Wow, that's a big deal.
How much of an impact do you think this will have for traders?
It's huge, especially for those active traders. Gas fees can really eat into your profits, especially for smaller trades. Getting rid of those fees could really make a difference.
Free trades? That's a pretty enticing offer. Okay, last but not least, let's talk about Cardano. Mercurio is making it easier to buy and sell crypto on the Cardano blockchain. They're doing this through an integration with MinSwap, which is a big decentralized exchange.
Ah, yes, MinSwap. It's one of the leading DXs on Cardano.
Could you remind us what a DX is and why this integration is important?
Sure. Decentralized exchanges, or DEXs, let you trade crypto directly with other users. There's no need for that central intermediary like a traditional exchange.
So more control over your funds.
Exactly. More privacy and control. The downside is that DEXs can be a little trickier to use, especially for beginners.
So this Mercurial integration is making things simpler.
Yeah, they're streamlining the process of buying and selling crypto on Cardano. That should make it more accessible for a wider range of users.
It sounds like Cardano is becoming even more user-friendly. Do you think that's part of a bigger trend in the crypto space, this push for accessibility?
Definitely. If crypto wants to go mainstream, it needs to be easy to use. This move by Mercurio is a great example of how projects are working to make crypto less intimidating.
Less intimidating and more accessible to everyday people. I like it. Okay, so we've covered a lot of ground today. From market dips to ETF surges, Bitcoin Sweet 16, gas-free trading, and even Cardano's growing ecosystem. With all this going on, what do you think is the most significant trend right now?
I'd say the biggest story is that surge in institutional interest. BlackRock's ETF, those massive inflows into spot Bitcoin ETFs, it's clear that big money is starting to take crypto seriously.
Yeah, those aren't your average retail investors dipping their toes in the water. These are major institutions making some big moves. Do you think this changes things for the average person who's invested in crypto?
Well, it definitely shifts the landscape. More institutional money can bring more stability and legitimacy to the market, but that doesn't mean crypto is suddenly a risk-free investment.
Right, the volatility is still there.
Exactly. Bitcoin could be up 10% one day and down 8% the next.
So it sounds like things are really heating up in the crypto world. With all this activity and innovation, is crypto finally becoming a mainstream asset class? Or are we still in the Wild West?
That's the million-dollar question, isn't it? I think we're seeing signs of both.
How so?
Well, you've got this increased institutional adoption, you've got more regulated investment products becoming available, and you've got platforms really focusing on user experience. Those are all hallmarks of a maturing market.
But on the other hand, we've still got those crazy price swings. We've still got meme coins popping up every other day.
Yeah.
And there's always that risk of a rug pull lurking around the corner.
Yeah, that's the thing with crypto. It's evolving at an incredible pace, but it's still finding its footing. There's so much potential, but there's also plenty of risk. It's a space that really rewards those who do their research.
And who manage their risk carefully.
Exactly.
Well said. That's a perfect note to end on. It's Halloween, and the crypto market is definitely keeping us on our toes. From Bitcoin's Sweet 16 to gas-free trading and the rise of institutional investors. There's never a dull moment in this space.
Never a dull moment.
So to all you crypto adventurers out there, happy Halloween. Stay safe, stay informed, and until next time, keep on diving deep.